Hey, good morning, everybody. It's Brian. Hope you're doing well today. It is Tuesday, September 8th. Pretty special day for me. It's my son's birthday, so happy birthday to my boy out there. Let's go ahead and jump into it. We're going to run through what's happening out there in Forex land. We'll have a look at what's happening in futures, and then let you guys get on with your day, and hopefully we'll see what the day brings. Might be some interesting stuff for us. So to kick things off, always begin with checking out our news. You know, it's interesting. We had a long weekend, right? So we had a lot of time to kick back, a lot of time to think, a lot of time to maybe work on your trading plan if you don't already have one. Which I know I probably say it too much, but it really is a big deal. There was actually someone I follow on Twitter posted the other day, maybe it was yesterday, maybe it was Sunday, I don't know, but he goes, if you can't, basically it boiled down to this. It's not the whole tweet, but if you can't stick to going for a walk every day, how are you possibly going to stick to a trading plan? And it's the same thing we see all the time. People fail to exercise, people fail to do this, fail to do that. I'm going to start out going to the gym every day, and then 2 weeks later they don't. It's the same reason folks fail in trading, is because they start out with all these grand plans, but then the plan just goes out the window. And I can speak from experience. I've done the same thing. It's very easy when we have all these emotions, especially in trading. It's such an emotional game that it's really easy to deviate from your plan, and that's when things kind of go off the rails. So just another reminder before we get going: stick to your plan. That's what it's all about. So we always kick things off by having a look at what's happening in the news, mainly because we want to know, are there any high impact news reports coming up that we want to stay away from. We want to maybe either tighten up our stops or just get out of the market until the news hits and then come back in after that. And today is one of those days where we just don't have a whole lot going on. It's there's news, but there's nothing that's really listed as a high impact report. These are all low impact news opportunities, so nothing really for us to worry about today. We'll just go in and trade the plan straight as it is. We don't have to wait for anything to happen. We don't have to be cautious around any specific time of the day. Well, I say we should always be cautious, but not extra cautious around an event that could potentially be changing directionality of the marketplace, right? So all good. So we were just ready. From here we can just go ahead and jump on in, see what the day is bringing us, and go from there. It's a very red day when we look at our overall dashboard here. We'll get to all the stuff in a second. As a matter of fact, the NASDAQ, I think, has fallen another 300 points just in the time that I was getting ready to prepare for this call. Anyway, so we're going to start over here with Forex, and then we'll jump back over to what's happening in futures and go from there. In Forex, we're always looking at things based on trying to find the currency or currencies that are actually moving, and then we pair those together. Obviously, we want to have some other considerations as well. We look at the currencies that are moving, so the ones that are diverging from one another. In this case today, for example, the US and the yen are very strong currencies. The Aussie and the pound are very weak currencies, so these are being heavily sold through the day. These are being heavily bought right now. So ideally, we would pair a heavily sold currency with a heavily bought currency, and that would be the currency pairing that we want to trade. Obviously, though, I mentioned there are some other considerations, and one of those is the typical range of the currencies that we're looking at. How much has something moved right now, and how much does it typically move? And if something has already moved as much or more than its range typically is, it's probably not a great idea to get into it. And that's something that we're going to that's going to affect us quite a bit today. As we know, yesterday was a bank holiday here in the U.S. and while Forex was trading, it wasn't as heavy as it typically is. Although we did have some big movement yesterday on some non-U.S. driven currency pairs. But today, especially coming in, we can look across the board here and we see that most of our currencies have moved considerably Like the pound yen, for example, yen's a strong currency, the pound's a weak currency. It's already moved 150 pips, and its average is anywhere from 120 to 130. So, and we look at this, we see it with the pound CAD, we see it with the, pound Aussie, we see it with the, pound USD. There just aren't really any trading opportunities because we've just far exceeded that typical range. Now, with that said, like we can look at the US versus the yen. It's only moved 20 pips for the day, but we can see it's been moving, in lockstep with one another. Typically, the US yen is a very correlated currency pairing, as we can see here, but it does, sometimes move 60 plus pips. So this could be an interesting opportunity here. I mean, it's only moved 20 pips. So if we do see some divergence between the US and the yen, where one of those really starts to show some weakness, that could be an opportunity to pair them together. But it's certainly not an opportunity on an open market breakout, like right as the new session begins, looking for a breakout opportunity. It's not really one that we have any real divergence on. We don't know which way the market is favoring that pairing to move, so we'll stay away from it. So for Forex today, all of that to say that it's probably a good day just to stay out and let the market do its thing, and then come back in once it's ready. Over here, checking out what's happening in the futures market. We're going to run through S&P, crude, and gold. We have finally turned that corner on the 4-hour. Remember last week, big sell-offs over the course of last week. And now we're to the point where we are in a short bias on the 4-hour. So the 4-hour, we've crossed through, we've broken through some key levels here, and now we see that the faster moving average has crossed below the slower moving average, telling us that our bias has changed. So we've got a short bias here on the ES on the 4-hour, and we look at the 30-minute. That is a short bias as well, so these two are in agreement. So that would tell us that today we want to start looking for short selling opportunities. What does that mean? Well, that means we'd either watch for price to break key levels, and actually 3380 is one of those key levels right here that we're sitting at. Maybe even as far down as 3360. But we either want to see it break and close below a key level to trade that breakout style, or if we're trading with the trading plan that we've set out here, we would watch for price to make higher lows and higher highs. So watch for a pullback. A pullback could be up to 3400, maybe even as high as 3415, 3420 area here. And watch for these pullbacks, but we watch for the market to make higher lows and higher highs, indicating that we're pulling back, and then we can play a breakout of that previously closed higher low as price moves back down short with some level of momentum. So we'd watch for higher lows and higher highs, higher lows, higher highs, like we've been seeing here yesterday maybe, and then break through that on a short selling opportunity. So that's what we'd be watching for on the S&P. If you're looking for breakout areas, like I said, short off of 3380, which we're at right now, so probably not a great, we need to see that during regular market conditions, as the regular trading hours begin. We've still got an hour and a half, right? Pullbacks up to 3400, maybe even as high as 3420 would be your pullback area to look for price to float up and then sell off of that in the short position. But we are looking for shorts there. Crude, same boat. Crude has rolled over on us. It was struggling around, just hanging between 42 and 43 for quite some time, and then began selling off last week, as did the S&P. And we're still looking for short opportunities here. So the 4-hour is short, the 30-minute is short, so that means our biases are in alignment, right? We've got a confirmed bias. So we'd look for short opportunities. What does that look like for us? Well, could watch for breakouts, and a breakout here. Again, I'd rather see it pull back a little bit rather than just look at a straight breakout. But if you're looking at breakouts below 37 would be where we'd be considering a breakout to the short side down here, or watch for pullbacks up to 38, 39 would be your pullback here. It's kind of these whole numbers, 38, 38, 50, 39 on pullbacks, or like I said before, use the trading plan, which is very mechanical, doesn't have a lot of subjectivity to it at all, which is just wait for price to make higher lows and higher highs, higher lows and higher highs, and as it pulls back, making higher lows and higher highs, watch for price to break back through, trail your entry point at the bottom of that previously closed higher low, and watch for price to give some momentum breaking through that. And as it does it, that gives you the chance to, you know, enter a trade and then see how it moves from there. Obviously, you know, that's not good throughout the day. You want to trade that during times when you've got the most volatility in the marketplace for the instrument that it is that you're trading. But anyway, looking for short opportunities. We talked about breakouts, we talked about pullbacks, and then we talked about the higher lows, higher highs. Gold also is in a short position. So, you know, the 4-hour is short, the 30-minute is short. So the exact same thing here. Breakouts, you know, looking at 1920, if we break below 1920, could be your signal to get into that as it goes short. You know, so that's a breakout. Pullback, so be looking at 1940 up here, big key level on the 4-hour. So if price pulls back to 1940, that would be the spot to look to sell off of on a potential pullback. Of course, there is, you know, again, the trading plan, which is simply, you know, let price move and trail your entry point as price makes higher lows and higher highs. Trail your entry point at the bottom of that previously closed higher low during a time that we've got volatility in the marketplace. And then if we get some momentum pushing back down, we take advantage of that. So as opposed to trying to just specifically call a turning point, we let the market dictate when it's going to turn and then give us some momentum to break back through, indicating that it has turned back in the direction of its current trend or its current bias, which is short right now. All right, so that's pretty much it for me, and I'll leave it here, let you guys get back on with it. Don't really have a whole lot to go into as far as other sidebar things. You know, it's the first day back after a long weekend. The market's going to be the market. Don't try to guess what it's going to do. Don't let your emotions rule it. Yeah, you know, just approach the market with a plan, something that is planned before the market actually opens, before you start watching your charts, before you click the button. Have a plan of what you're going to do. As everything lines up and meets that plan, do it. If things don't line up, no harm, no foul. Just stay away from the market. It's that easy. So we'll leave it there, and that's it for now. Have a great day. Bye.